Dubai's biggest bank just posted its first full quarter under a regional war, and profit didn't move up. Not up much, not down, just flat. And that's the story, because underneath a headline that looks boring, Emirates NBD's income grew at nearly 6 times the pace of its bottom line. That gap is where the entire investment case now lives. Second quarter net profit came in essentially unchanged from the first quarter and marginally higher year on year, while pre-tax profit, operating income, net interest income and EPS all came in ahead of analyst estimates. For the first half, the group delivered record pre-tax profit with total income and pre-impairment operating profit both growing at double digits. My read, operationally this was a beat. Structurally, it was a quarter of transition. So what actually drove it? 3 things, and only one of them is organic. First, the balance sheet. Total assets and gross loans both expanded sharply, but a large slice of that came from consolidating RBL Bank in India. That's a genuine strategic win, scaled entry into one of Asia's fastest growing retail banking markets. But investors need to separate acquired growth from earned growth. Second, non-funded income. Fees, FX, wealth and investment banking grew far faster than lending income across the half. That's the deliberate strategy working. Build income that doesn't depend on where the Fed sets rates is the most underrated positive in this release. Third, margins. Net interest margin compressed sequentially and landed slightly below consensus, sitting at the lower end of management's own full-year guidance range. Cost to income also ticked up quarter on quarter, though still comfortably inside guidance. Now the part most people will miss. Fact, pre-tax profit hit a record. Fact, net profit barely moved. The distance between those two lines is tax, hyperinflation accounting on the Turkey business and new this quarter, minority interests. Because the group owns a controlling stake in RBL, not all of it. My interpretation, the record is real, but shareholders capture less of it than the headline implies. Watch that wedge. The genuine positive hiding in plain sight, impairments came in low this quarter and half-year cost of risk stayed inside guidance, despite a full quarter of conflict. After management layered on a conservative provisioning overlay earlier in the year, credit simply hasn't cracked. Does management sound confident? Yes, and specifically confident about the UAE economy, customer activity, capital and liquidity. My read, the tone is assured, but it's assured about the balance sheet, not about margins. That's a deliberate emphasis. My assessment, this quarter doesn't weaken the long-term story, it complicates it. Emirates NBD is converting from a UAE rate cycle bank into a diversified regional and Asian franchise. That's more durable, but the earnings translation is messier. Before next quarter, watch 4 things. The updated cost of risk guidance, whether margins stabilize or keep sliding, how much RBL actually earns from shareholders after minorities, and whether fee income momentum holds without a big first quarter markets tailwind. Fundamentals intact, complexity rising, that's the quarter.